had to remember to use the microphone. Good morning, everyone. Today is Tuesday, February 10th. It's 11:04 a.m. and we are joined, this is a briefing of the Government Labor and Elections Committee, and we are joined this morning by the Department of Labor for a briefing on various topics, and we will begin with Secretary Portia Wu. Good morning.
Do not press, so I didn't want to press it. Okay, thank you. Thank you, Madam Chair, Vice Chair Kerr, and all the members of the committee. It's a pleasure to be before you. My name is Portia Wu. I am the Secretary of Maryland Department of Labor. I'm joined by our Deputy Secretary, Jason Perkins Cohen, who is also leading. He's the interim lead of our Unemployment Insurance Division, and Sabrina Steele, who is the Policy Director in Unemployment Insurance. When we get to the wage enforcement piece, Commissioner Devke Burke will come up to the table and join us. I wanted to start first with an overview of the department and our mission. Our focus is to connect Marylanders to good jobs, protect workers, consumers, and the public, and support businesses and foster economic growth and competitiveness. I will say at the outset, we have an overview of the department. I know some of you have worked with us extensively. Some of you have not. I just want to offer myself and our Legislative Director, Andrew Fulginiti, we are always available to you to answer any questions, provide any data, help with constituent issues at any time. So please do not hesitate to reach out. These two slides give an overview. We're a wide-ranging department, traditional labor issues, including wage enforcement, unemployment insurance, but also occupational and professional licensing for the non-health professions, and the Office of Financial Regulation. So things around banking for especially state-chartered banks and credit unions. We also cover workforce training and adult education. That includes correctional education, family and medical leave insurance, which we're in the process of building. Those employer contributions will be starting next January. We'll be doing a soft launch this spring, and the Horse Racing Commission. Okay. Now I want to dive into unemployment insurance. I think most of you are fairly familiar with UI. So I'm not going to belabor this, but this provides some background. UI is for partial income replacement. The maximum weekly benefit in Maryland is $430 a week for up to 26 weeks. Those benefits are taxable, and it is funded by employer-paid contributions. Every year, employers are given a certain tax rate, and that tax rate is based on two things. One, whatever table we're in. Right now, Maryland is in tax table A for 2026. That is the lowest set of tax rates. And then within that tax table, there are several rates, and where you are as an employer will depend on if you're a new business, and also what your experience is. So for example, if you have laid off many workers in the past, you will have what's called a higher experience rating, and you will be among the higher rates on that table. Many of you may recall during the pandemic, the rates went up to other tables, so A, B, C, D, E, F, and in each subsequent letter, the rates across the board get higher, the tax rates. The taxes are only paid on the taxable wage base, which is the first $8,500 of wages for each employee. I think I went over most of this already. Again, all of these taxes go into the UI trust fund, and they're used to pay benefits. Unemployment insurance also is funded, needs to run, and we are funded through federal administrative funds for that. Unfortunately, over the years, those funds have not kept up with the pace of inflation. Maryland has put in place through legislation that was passed last session, a small administrative fee that is similar to what several other states have done to try to make up for that cost to continue to operate the program. We did reduce the tax amount to employers by that same amount, so there was no increase in taxes to employers because of that. This is just a quick overview. The claimant has, they need to file the claims. They need to provide weekly certification. UI is only available for individuals who certify each week. They're still actively looking for a job. There can be reasons you can be disqualified for unemployment insurance, or you are eligible but you don't get paid, like you have a large severance payment, for example. And the agency's job is to make determinations, pay benefits, and collect employer contributions and run the fund. want to provide a couple of data points that we thought might be useful. Post-pandemic, we remember there was a giant spike during pandemic. The last year or two, the number of unemployment insurance claims has remained roughly consistent. And of course, this is something we're watching very closely as we look at the economic health of our state. Where's the Fed? Oh, I'm sorry. I think we dropped the federal slide, but there was a spike, and we often get the question, where are all the federal unemployment insurance claims? There was a spike in the fall in October when the shutdown occurred, because individuals who were furloughed can apply for unemployment insurance. They do have to pay it back. But otherwise, we've seen roughly consistent numbers. Jason, I don't know if you know the number per month, but it's much higher than last year or typical years, but it has not been thousands of individuals per month. I think it's in the hundreds per month.
Yes.
And then the next slide is first pay timeliness. So I know this is something you hear a lot from your constituents about. Maryland and all states, frankly, had very strong performance in terms of getting around to paying the claims within 21 days before the pandemic. After the pandemic, not only did we get overwhelmed with claims, Maryland Department of Labor also lost about 150 staff from our UI division during the course of the prior administration. So we had fewer staff to manage, and also the problems of ID fraud and other kinds of fraud became much more prevalent. So you can see here, Maryland has improved. We've improved particularly during the last couple of years. We are still lagging the US average and the federal timeliness benchmarks of 87%. And this is part of why it takes more time to adjudicate claims. Unfortunately, we just have a high percentage, and this has been consistent in recent years. It's come down somewhat, but even now, 15 to 20% of claims are flagged for fraud. That does not mean they're fraudulent. It could mean someone had their identity stolen during the pandemic, so something looks amiss with their claim. It could be, we're very rigorous on this now, so if there's a discrepancy, you recently changed banks, you recently moved, and your address doesn't match what's on your driver's license, things like this that could be red flags, we do take a closer look at those claims because of our prior experiences during pandemic. We don't want people having their benefits stolen. We also know it's really important to safeguard the integrity of the trust fund and the benefits and the amounts employers have paid in. We do have a number of challenges that we are addressing with the unemployment insurance system still. As I mentioned, ID theft increased dramatically during the pandemic, and we continue to try to work on fraud. There are new versions all the time. We went through a period a year or two ago where fraudsters were making up a new fake employer, stealing a bunch of legitimate Social Security numbers, filing, those people as their employees, and then, immediately filing for claims under those employees' names. So, they're always changing. We've seen deep fakes in terms of photo verification, so we do need to continue to stay current. We've instituted a number of measures. We have True ID, which is a means of phone-based or iPad-based verification. You can go to the post office and verify your ID. We are constantly working with LexisNexis and other fraud, response providers to make sure we have the most updated tools. And as I mentioned, we do have various flags where we then do manual review if there seems to be something suspicious about a claim. I mentioned the resource shortfall with the fall in administrative funding. We often hear from people, Beacon is really frustrating. Why haven't you fixed it or replaced it yet? We had been successful in obtaining almost $25 million in grants from the federal government, in part to modernize and simplify our UI system. Unfortunately, along with a number of other federal measures last year, Federal Department of Labor took all of those grants back from all of the states. So we were not able to proceed with that. We are sort of using the tools that are available and doing our best, and we do have some modest grants that we've obtained from other sources to be able to try to improve claimant experience and service. It's been very important to me to improve customer support. Some of you have heard me say when I started at the department, several months in, I said, who are these people coming to the lobby? Why are they coming? And the security guard said, well, they come because they have a question about how they need help with UI. And I said, well, what do we do? And he said, well, we tell them to scan that QR code on the wall and get an appointment with an Accenture agent who could not resolve their claim. They were just a call center person. And I said, we're not doing that anymore. So we have people, we have them at Utah Street, we have them now at our headquarters on Charles Street. We have a call center every day, and we also have established dedicated UI staff in a couple of our busiest American job centers. And last year we saw over 14,000 residents in person to help them and assist them with their various claims. Can you go back for a second, Sabrina? I will also note, you may hear from some constituents, it's taking a long time to get through on the phones. I'm frustrated. We did change. The state had contracted with Accenture during the pandemic. Understand there was a huge surge in volume, over 1 million claims in that year. However, we were still working under that contract. We eliminated our own call center. So we had become dependent on that contract, and it was costing us something like $35 million a year. We'd spent over $300 million on it in those 5 years. We switched and went to in-state service last year, and completed that, and we're paying more like $9 or $10 million a year. So it's a significant savings on administrative costs. Also under UI law, only state staff can resolve, state merit staff can resolve claims. So we were having someone pick up the phone who was a contract call center who couldn't actually do anything to fix your claim, which was a really high source of frustration for callers. We have addressed that. The difficulty is, of course, we only have so many state staff, so we do see longer wait times when there's a big surge. Overall, we were counting the metrics, and we were doing roughly on par with how Accenture was doing, but we have had a number of events, which I'll talk about in a minute, that have led to higher call volumes. And then, as I mentioned, we are trying to improve our systems. We do have some grant-funded work with Harvard and Stanford now to improve customer experience. We've overhauled our website because it was really not intuitive and very hard for people to understand what they needed to do. But again, the loss of federal funding is making it more difficult to go as quickly as we'd like with some of those technology improvements. I want to touch next on overpayment recovery. This is something you may have heard of either from stories in the news or from your constituents. So at a big picture, overpayment is when someone receives a benefit that we believe they should not have received. That could be because you weren't actually that person, your ID was stolen, we asked you to come back and verify your identity and you didn't respond, and I'll talk more about this in a minute. That was a major source of overpayments during the pandemic. Or for whatever reason you aren't eligible, you actually worked in a second job where you made too much money and you're not eligible for benefits, you didn't leave the job for a covered reason. Federal law, of course, requires us to go back and collect overpayments. Overpayments have to be established within 3 years of the actual payment occurring. We do have the ability to deem older overpayments uncollectible if we haven't been successful in getting them after 5 years. And of course, what happens when those overpayments are collected is they either go to the state trust fund if they were paid out of state monies, or if they were things like CARES Act funds, other emergency federal benefits, they go back to the federal government. So there was a recent audit finding. I'll just speak about the audit finding, and also you're probably hearing from constituents about letters asking them to return overpayments. These two things are related. These are the underlying facts. What happened is during the pandemic, the Department of Labor under that administration stopped collecting overpayments. Everyone was overwhelmed. There was no ability. Also, people were experiencing great financial hardship. So they did not consistently resume doing so. The department was also sued in 2021 for when we issued a letter saying, here's an overpayment. The department at that time was not giving people a right to appeal that determination. And that was found to be a violation of due process. A settlement agreement was reached in January 2022 to stop doing the collections and establish a new process that complied with due process rights, informed claimants of the right to appeal, opportunity to seek a waiver if they had financial hardship. Next slide. Unfortunately, and I will note, the Hogan administration was able to recover. There were a lot of debit cards went out during the pandemic for UI benefits. The financial institution that was issuing them, and we also had flagged many of them for fraud, and so those amounts were frozen in a bank. The Hogan administration was able to recover about $484 million from that financial institution in 2022. After we started in this administration, we realized even though the settlement agreement had been reached at the beginning of 2022, they had never turned things back on, right? The processes and the compliant notices were never developed. They were never issued. So we had to do that. We had to redo the system. In the fall of 23, we started issuing them again, going forward for new overpayments. We also were working with the same institution to recoup the rest of the frozen funds. Last year, we were able to recover $520 million. This past winter, we also initiated retroactive overpayment processes. So we went back to people who had either hadn't gotten notice before and were in the 3-year window, or had gotten a notice but it was defective, and said, here's the notice, you may have had an overpayment. The vast majority of these amounts, both that we are going after and also that were noted in the state audit of several $100 million that had not been pursued in recovery, occurred during the prior administration. It's like 80 to 90%. So the reason, sometimes we get questions, why are you pursuing this now? It is our duty to pursue those older, going back in time overpayments. I think the next slide does the next slide? So, no, this is about the support, but we see with the overpayments, there are a couple responses we are getting, and we understand some constituents are very upset. A few things happen. One, I never filed for unemployment insurance. What is this? I never knew my ID was stolen before. And that is happening in a large number of cases. What we explain to people is, don't worry, there's a way to file an affidavit to prove you are not that person, or you weren't at that address, or you never received that check, and we can clear it up. And it's important to do that because if the person were to file for unemployment insurance later and really needed to do so, if we don't clear up their record, that's going to show up, that prior fraud flag. 2, we do have individuals also, during the Federal CARES Act period and pandemic era benefits, the benefits went out the door, and then the federal government came on later at December 2020, January 2021, and said, you need to do this additional ID verification for individuals. We sent those notices to people. Many people did not see them or might have thought they were fraudulent. They weren't checking their Beacon portal. They already got their benefits. They didn't go back, and so they never responded. The problem for the department is we can't tell if people didn't respond because they were fraudsters or they didn't respond just because they didn't see it or didn't know they still needed to do it. So we are getting also notices from those individuals who are saying, I thought I totally legitimately got these benefits. Why am I being told now that I have an overpayment? We just need individuals to verify then that they were a legitimate claimant and can provide the required ID. So those are the 2 main ways that we are resolving these claims. There also can be, like I said, either they report the identity theft, we verify their identity, maybe they say you didn't get it right, I did have an overpayment, but it's not this much, or you didn't understand, I really was eligible, or individuals can also request waivers for financial hardship or figure out payment plans to repay their overpayment. So we're trying to be supportive. We know there is a lot of confusion about why we're going back to this time, but it is necessary, and we have to be responsible fiscal stewards of the fund. So we are now addressing all of those issues. That, I think we're going to pause and take questions on unemployment insurance before we head to wage theft, if that's okay, Madam Chair?
Sure. Okay. We'll take questions. Delegate Fisher.
It's an older room. What do you expect, Good morning, Secretary Wu. My question regarding unemployment insurance relates to AI, and obviously AI has not been fully implemented yet in our economy, but it's happening really fast. And some of the things I was thinking of as a nerd is that when AI is implemented, it's going to affect many people who are, of course, are in jobs like insurance, could be law, could be brokers, all kinds of things that we just anticipate and also don't anticipate. When that tide comes in, I have a sense it's going to come in pretty quickly. There's going to be probably a good amount of unemployment across the country, but certainly I would think this state too. Is there any modeling? Let's face it, I don't think anyone really knows, but it's just a question. Is there any thoughts about this internally about, well, what happens when that happens?
Thank you, Delegate. Nice to see you. So I will say I know there is legislation that's being considered before the Assembly. The department has done a bunch of projective modeling, and that is based upon models that Federal Department of Labor has given us. That's just generally speaking. It's not about AI per se, but it's part of understanding, we do feel like we need to look going forward at the health of the trust fund, and we've done modeling on, started it 2 years ago based on, the historic low unemployment we'd experienced. We're now using sort of average unemployment, which is 4.9%. That's been the average for the last 25 years, 30 years even. I do think there are also scenarios where there is a more significant spike in unemployment, and if you think there's going to be significant displacement because of technology or other reasons, those are the lines we would look along. So we do have that modeling. We're happy to share it with you in the committee.
Thank you.
Thank you. Delegate Terraza.
Thank you, Madam Chair, and thank you for your presentation and for working with us on this. I'm curious about, you said that we have sort of a high percentage of flagging for fraud compared to other states. Do we have a high finding of fraud ultimately? Or, I'm sure you've looked at whether we're over flagging for fraud. So I guess that's where I'm kind of going with that.
I will say, first of all, that percentage is not compared to other states. That's compared to our prior experience.
Oh, okay.
The 18 to 15 to 20%. I think that's fairly consistent with other states in terms of what they're seeing. These trends were exactly the same, right? During pandemic, when it was people from, other countries flooding the United States, they didn't discriminate based on state. It happened everywhere. I don't know if, Sabrina, did you want to add something on the percentage? No.
I can't add anything on the percentage, but I would just say, to your point, I think making sure that we have the volume control on our fraud flag set the right level so that we are flagging people who are entities who are actually committing fraud but not holding up claims that aren't. And so we're constantly looking at that. Also, a claim that is flagged for fraud could get cleared very, very quickly. It could be a simple thing. Claims that don't, and sometimes it just requires us asking for additional information. Sometimes we don't get a response that might indicate that they no longer require unemployment, or it might be that they can't answer the question we're asking. It's hard to know.
So just one quick follow-up. So is the notice for fraud and also overpayment, is that just going through Beacon, or that is, how are you letting folks know? Because sounds like unresponsiveness is a problem. So it could also mean they don't know, which.
Absolutely. So in terms of the retroactive overpayments that we initiated in December, we actually mailed, our old school mailed all those letters. It also showed up in their Beacon account. So there was two ways. When someone applies for unemployment insurance, they indicate their preference and how they want to be contacted. And so that's up to them. Sometimes they ask for mail. Sometimes they prefer text and or email, and we honor whatever they request.
Thank you. I appreciate it.
Delegate Sample Hughes.
Thank you, Madam Chair, and thank you for being here today. Secretary Wu, I'd like to say thank you so much. I remember when you did your first presentation in the ACM committee, and you had just gotten started, and you said, look, just give me time. I'm trying to work through all of this. So the fact that you were able to come here today and get those updates on how systems have worked for you and some haven't based on financial resources, or I think that's important for us to know as a committee. I had two questions for you. Had a constituent trying to figure out how to get to the department or who that would be around paying the state unemployment tax. We're having much difficulty in doing that. If you could give me who that direct person would be so I can get that settled. But my second question is, I just need to understand a little bit better the Schedule A, I think you had referenced. I remember hearing it back when I was on ECM, but I really need to understand when you talk about that, it's at its lowest now, and if you could just elaborate, that would help me.
Absolutely. So there is 6 schedules, A through F. And we probably have a copy of it here. And in each schedule, then there are 15 different rates. And those rates range from, and where the bulk of employers are, they're on the lowest rate in Schedule A. So there'd be like, Schedule A might have lines A1, A2, A3, like all the way. I think the largest group of employers actually is at A1, which is the lowest rate, which I think is 0.3%. On $8,500. It translates roughly about $26 a head for the whole year. So for each employee, if you're on that schedule, you're paying about $26 a person. Then A2, A3, it goes up based on your experience. New employers have a rate sort of in the middle there because we don't know what your experience is, so we say, well, you'll pay roughly this. But if you're in an industry with a lot of churn and you have been, for example, some employers have seasonal layoffs, and so they're laying people off every single year. And so we know that for those, they are charged, like any insurance, if you have more experience using the system and calling on the insurance system, you'll be charged a higher premium. That's basically the same kind of thinking. But we can get you the exact rates if it's helpful to see what those will be. It will be, and every year we mail out in January, and all employers get their rate. This year, I think about 120,000 employers stayed exactly the same as last year. 20,000 went up, 20,000 went down. It all sort of just depends on your experience or how old your business is or those factors.
Okay, so when you move from Schedule A to F, then B, C, and D, what is
So what happens is basically all the rates across the board go up. So like if the lowest rate is 0.3% on Schedule A, on Schedule B it's 0.6%. All the rates across the board will go up. And the highest rate on Schedule A, I think it's 7.9%. On Schedule B, it's like 9.5% or whatever it is. So as one difficulty about unemployment insurance is those triggers are written in the statute. And so as the trust fund money goes down, there's automatic escalators to ratchet the tax tables up. But the problem is the reason the trust fund's going down is because we have high unemployment. And it means employers are hurting and you're maybe heading into a recession. That is a tough time to be increasing taxes and contributions on employers. And we will be providing some modeling based on the legislation that's been put before the General Assembly. I will say, there are a number of observations here. Maryland's taxable wage base is much smaller, capping out at $8,500. That does mean that employers that have a lot of low-wage employees are bearing more of the brunt, right? That if I have a $10,000 employee and Jason has a $100,000 employee, we're paying the exact same tax on that employee. So, but the person who's at $100,000 is getting the maximum benefit. My worker is getting a lower benefit. So there are some ways in the system where, some of the contribution tax is more focused on especially smaller businesses with lower wage workers.
Okay, thank you so much. Thank you, Madam Chair.
Thank you. Delegate Solomon.
Thank you, Madam Chair. It's good to see Secretary Wu, my favorite District 18 constituent who happens to be a cabinet secretary. Thank you for being here and for your team's work. Unsurprisingly, I had 2 questions related to the audit. I've gotten a bunch of questions, and I was hoping maybe you could sort of clarify a little bit more. So on the timeline on the finding around the pursuing of overpayments, and I know a lot of that obviously had to do with the previous administration and the lawsuit. So you all submitted a timeline, and you mentioned this briefly, September of 23, the department began issuing overpayment determinations again. And then there's a 2-year gap to August 1st of 2025 where it says the department resumed billing activities on overpayments. Can you talk about what happened in those 2 years? I just want to make sure that we've got clarity around that time frame.
Yes, and I can ask Deputy Secretary Perkins-Cohen to chime in too. Part of what happened is you need to give people notice, but then you need to actually start billing, and we had to make some changes to our systems to make that happen. The other problem was because we had this Bank of America settlement out there, we knew about $500 million was tied up. We told people we had overpayments, but we didn't know what the overlap was. So we didn't know that their funds might have been tied up in that bank account. Then we would have billed them even though actually the money was frozen. So until we were able to release those funds and then reconcile them against the overpayments, we had concerns that we would be billing people for amounts that we actually were going to recover from another source. And it has turned out there is quite a bit of overlap, actually. And so that has, you had to go on the back end and redo the calculations. Jason?
I don't have much to add, but you can see from the timeline that basically when the second settlement occurred, it was not long afterwards that we resumed overpayments. And to the Secretary's point about 2023, again, it's not just about issuing a letter. All the back-end work of the system has to be able to go through that whole process, which includes providing appeal rights, entering the decision, and adjusting the overpayment as necessary depending on what that decision is.
Great.
I will note also this has enabled us, turning on the system has enabled us to take advantage of what are called TRIP and TOP, which are federally available mechanisms that you work with the Treasury Department to, say, offset if someone has a tax refund but they still owe monies. Like, there are typical systems for this, and we had to get all of our systems compliant to be able to take advantage of those.
Great. No, that's super helpful. The other question I had, and I feel like we've had conversations about this, I think, globally before. Obviously, there were claim issues and legal issues against the Beacon themselves, even outside of our state. Was there any pursuit of liquidated damages or return payments on the vendor contract with them because the system was not satisfying criteria, or recouping anything from Beacon for the issues that we've dealt with?
Just give me 1 second. I'm just going to check with my counsel. Apologies for the delay. There is actually other litigation out there not initiated by the department about the Beacon system related to some publicly filed federal actions about their IP. So I'm a little cautious about saying anything here. I will say, generally speaking, we have really tried to hold this vendor to account more. It has continued to be very challenging, right? We literally, when we started, I think we had over 1,000 open tickets that were not resolved. We're down to hundreds now, but the performance is not what I would expect for a system.
So I don't want you to share information that would jeopardize the case, but I think this is probably kosher. Are we party to that lawsuit? Can we join it? I see your counsel's shaking his head.
We are not.
Okay.
I'm not going to speak to that. I will say we are monitoring that lawsuit because, of course, to the extent there's any relief that might be awarded that might impact the unemployment system and our ability to operate, that's incredibly important that the state safeguard our interests. At this point, we are completely dependent on the Beacon system to run and operate unemployment insurance. Even though it has many flaws, it is the system we have, and to replace it would be expensive. I think we had hoped those modernization funds would enable us to start. We just don't have that option at this point.
Yeah, I will follow up with you more on that, but thank you very much.
Yes,
thank you, Madam Chair.
Thank you. Thank you very much. Delegate Wu.
Thank you, Madam Chair. Thank you, Secretary Wu. Very glad to see you here. I have a few questions. One question is why the former administration, the Hogan administration, dropped the litigation for the fraud?
I'm sorry, why they dropped it?
You said they dropped the pursuit to find the fraudulent cases.
I can't speak to why they stopped pursuing overpayments. I'm sure it was a host of factors, but I really don't know. I assume a lot of it was just being completely overwhelmed during the pandemic, as well as the financial suffering many people are engaged in. But the fact is, and I understand it's difficult to go back and ask people for money from before, but that's the financially responsible thing.
So the fraudulent have two kind of cases. One is they filed because they don't know, they're not qualified. The other fraudulent, I mean, it's maybe a scammer, right?
Yes.
So I talk about the other case. For the scammers, why we're not able to pursue and prosecute them?
So I think part of the difficulty is to the system, they look similar because a scammer, a lot of these versions of fraud, there's a real person out there. It's not as though the person made up a false identity, although I'm sure they tried that too. It's they stole someone else's identification. So to us, it looks like that, Jason filed for unemployment insurance, right? Because they took people's real IDs and real information. We certainly have, and I know there were attempted actions before, and for some of them where there was theft or collusion, the department has collaborated with federal law enforcement, state and local law enforcement to pursue those funds and pursue those individuals. For example, if there was, systems where people access the system, and that's just not unique to Maryland. Other states, these issues occurred as well. We have pursued those actions. Unfortunately, we know many of these actions for fraud were initiated, for example, by organized crime outside the United States, and that's just
so like cyber crimes, right? So, does FBI helps us to find those cyber cases?
I don't know what to say about the FBI. Those investigations, actually, we refer them to the U.S. Department of Labor, and their OIG works on them, and they work with the Justice Department to pursue those cases because we don't have the ability to pursue international or national cyber criminals. It's not something we're able to do. And also, we saw this was not something that just happened to Maryland, right? These cases spanned many states, so we collaborate with the U.S. Department of Labor to pursue these cases.
Okay, I think, do we have any success from their side?
I'm happy to send you what they have been successful in recouping or addressing. Yes, there have been some cases. I don't know that they were the sort of massive identity fraud that it's very difficult to find those organizations and pursue that money, especially if they were overseas.
But I would just add that the recoupment with the financial institution, the two that total $1 billion, is a very big success for Maryland.
I see. Okay, great.
Yeah, I would say Maryland was aggressive in flagging potentially fraudulent cases early on, and that's how those funds were frozen, and we were able to recoup them. I don't know that many states have been able to recoup that level of money.
Okay, I'm glad to hear that. I just want to share a case, right? I got a friend, it's a really close friend. They got a fraudulent case, filed unemployment benefit under their names several years ago, right? Now they got a tax bill for that situation. They feel both frustrated. They get a tax bill for the unemployment benefit claim, and then they feel they kind of got a cyber criminal against their case, and nobody really pursues the case to find those cyber crimes, right? So they get double hurt.
Right, absolutely. So for individuals, that's often the first time people find out their ID was stolen is they get the 1099 and they say, what's this for? I never got these benefits. We can issue a zeroed out 1099, an amended one, if people will work with us. We can get that cleared up because they can demonstrate this was fraudulent. I did not get the money. I shouldn't have to pay taxes on it. So
for that part,
Delegate,
just one more question, right? So for that,
you've had several bites of the apple.
Okay, thank you.
We could,
We're happy to follow up.
I'll follow up
offline.
Yeah.
Happy to follow up. Absolutely.
Yes, thank you. Delegate Schindler.
Thank you, Madam Chair. And I want to thank you guys for the efforts in customer service, particularly moving that call center in-house. That's a big change. My question actually is in regard to the 21-day timeliness requirement for first payment. I see that we're on the upward trend and we're trending with the rest of the country, but it seems like we are still consistently over 10% below the U.S. average. What steps is the department taking to try and close that gap, and why do you think that we're further behind other states with the same challenges?
I think there are a couple of reasons. One, the first step I'd say is we're trying to backfill and bring more people on board. And in part, especially if we think there might be continued economic issues for whatever reason, we need to have more staff on board because we lost so many staff, as I noted early on in the pandemic. We're also thinking about how we can use technology to support us. Maryland does have a complicated system, and frankly, we just haven't kept up with basic improvements. So, for example, at all our centers, there's a binder this thick with paper issuances of policies that everyone has to learn to be able to work on claims. So it takes people almost 2 years to be proficient in that because they are learning it in a very manual, old school way. It means they learn it very thoroughly, but it takes a long time. We are exploring how can we have, right, sort of like a helper, right? Like something that a new staffer can query automatically and say, how do I do this? How do I do that? And we think that technology can help with those kinds of tools. That's the grant I referenced. And we'll have some experts from Harvard and Stanford that have helped other states with their benefits processing issues. So they have that experience. We've also gone to New Jersey, other states. We're all going through these journeys, Colorado, Washington, to understand, like, hey, how did you guys deal with this? But you're absolutely right. We're coming from a fairly lagging place, and we really do need to improve.
Thank you.
I would just add that the federal standard is 87%, and we are where we are. But that standard existed prior to the pandemic, prior to the increase in fraud, and most states are now struggling to hit that standard. That's not an excuse from us. We have to do better, and we are, to the Secretary's point, looking sort of soup to nuts at where we can appropriately shave time. So in the example of fraud, if a claim is flagged for fraud and it's ultimately not, how do we make that decision more quickly, make sure that claims that aren't fraudulent aren't getting held up? And we're going through that process.
Thank you.
Delegate Stewart.
Thank you, Madam Chair. Thank you all for joining us. For the committee's edification, it has now been 13 years since I was Secretary Wu's intern in the White House Domestic Policy Council. So celebrating a happy 13 years to you almost. So I just have a few. I appreciate the presentation. This is my first time having this subject matter on my committee before. So a couple I think will be short questions. First, does Maryland allow taking up to 100% of a worker's weekly unemployment check to recover a non-fraud overpayment?
What's the percentage we allow to cover? No.
Is there a cap
What's the
of?
percentage?
There is legislation passed.
Yes.
Because I know New York.
We do. There's a cap on it. It's actually, yeah, it is in statute. I just can't remember it off.
Okay.
Is it 50? I just don't. We can find
New
the
York
citation
caps it at
for you,
50.
Delegate.
I can try to find it.
Yes,
Okay.
we'll find the cap. Yeah.
And what percentage of the overpayment bills are due to like agency or employee error versus worker fault or fraud?
So we don't know that yet. I would put the sort of pandemic era things in a special bucket, right? I think there's in a typical time, there's a combination, right? There are many claims where, well, I didn't realize I had to tell you I was actually working a second job, so I had this other income, or I didn't realize severance actually meant, I got 15 more weeks of pay from my job, so I actually couldn't collect the unemployment payments during that time. Like, honest mistakes happen all the time where people don't realize there's an impact. We try to fix our system so that doesn't happen. I would say, however, from the pandemic era, we believe a very high number were either fraudulent or individuals who simply didn't realize there was this later post hoc, hey, you have to prove your ID in a different way, right? Like, it was just such an extraordinary time. That's who we've heard from. We still have not heard from a very high number of the letters that we sent out. So we don't know. They may just be outright fraudsters. And of course, they're never going to respond to a letter.
Okay.
Yeah.
Great. And last question, Madam Chair, if I could. What is the hardship waiver approval rate? And do you guys track how many people try to apply for the hardship waiver after the 30-day deadline and therefore cannot apply for the waiver? Or is there any sort of, relaxation of the 30-day rule in certain instances?
I do not have those statistics at my fingertips, but we're happy to follow up.
Okay, awesome. Thank you all.
Thank you. I do have one question. I think just in reference to slide 17, when you talked about addressing resource shortfalls, and I think in the broader conversation about resolving overpayment, identifying fraud, timeliness of, payment of claims. So I'm curious if you guys have made a request for funding in the budget, or, where do we see us getting those necessary resources? Because it seems like they are, in fact, very vital to just To the whole entire UI system, so I'm hoping you could speak a little to that.
Well, having that language in the BRFA has been absolutely critical to be able to use that for administrative money, because you cannot use the employer contributions that are paid into the trust fund. Those have to go for benefits. That has been critical. I would say other language that was passed last year of preserving a certain number of PINs for the department that was reflected in last year's budget has been critical, and I would have to double check on what the PIN count was that was submitted this year in the budget. But I think because of the hiring freeze and the other reductions that happened in personnel, the personnel savings last year, we worked hard to make sure unemployment insurance would not be subject to those reductions, because we can't afford to have fewer staff. We're already still digging out of the hole of the 150 we lost during the prior 8 years.
Okay, so just to be clear, you said that UI is not subject to the hiring freeze?
It's not that it wasn't subject to the hiring freeze. There was a specific number of PINs designated in last year's budget and legislation around that weren't subject to the personnel reduction. If you recall, I think you included a $120 million personnel reduction. UI was not subject to it, and there was a specific number of PINs that were protected.
Okay, thank you. And seeing no more questions on UI, we're happy to transition to your next panel.
Thank you. Thank you. I'm joined by Commissioner Devki Virk, who leads our Labor and Industry Unit, and Marissa Yancone, who is our Legislative Fellow. So I'm going to just do a quick intro and then turn it over to the Commissioner. I would say this has been an area where we have really, and I credit Commissioner Virk and her team, we've really placed a strong emphasis on enforcement. We know that wage theft and worker misclassification exacts a heavy toll on workers across our state, on businesses who are playing by the rules, and then on our state fisc, because that means unemployment insurance, workers' comp, other kinds of premiums that are not being paid, and when they're not paid, that means the risk gets spread to other employers and they have to pick up the tab. So with that, I'm going to turn it over to Commissioner Virk to talk more about our work here.
Good morning, Chair Wells, Vice Chair Kerr, members of the committee. I'm delighted to be before you today. I'm Devki Virk, Commissioner of the Division of Labor and Industry within the Maryland Department of Labor. And I'll start, I think, by just doing a brief overview of the major laws that are enforced by our Wage and Labor Standards Unit. Let me pause to say that the Wage and Labor Standards Unit is one of 4 units within the Division of Labor and Industry. We also have Maryland Occupational Safety and Health, which is a full state plan for occupational safety and health. We have the Building Codes Administration for the state, and we have a Safety Inspection Unit, which deals with public safety on elevators, amusement rides, boilers, pressure vessels, railroads. So I'm focusing today on the Wage and Labor Standards Unit, and these are some of the laws that our investigators and our staff enforce. The wage and hour law, including overtime, child labor protection, wage payment and collection when people don't get paid or don't get paid the money that they're owed, the equal pay law. And let me pause to say that also includes the wage transparency and pay range transparency laws that were passed by the General Assembly, I believe in the 24 session, that require all workers to receive a pay stub, which identifies certain information, including hours worked, rates of pay, et cetera, and the pay range transparency law, which requires postings for jobs within the state to contain a pay or salary range as well. In addition to that, our unit enforces the labor standards on state-funded contracts and construction projects, the Prevailing Wage Law and the Living Wage Law, the Healthy Working Families Act, which is our Sick and Safe Leave Act, the Workplace Fraud Act, which I think is going to be the main focus of our discussion today, and an anti-retaliation law that, again, the General Assembly passed in 2024 that prohibits retaliation against workers who are attempting to exercise any of these rights that I just enumerated. Next slide. So just, again, a brief overview of the trajectory that we've been on since this administration came in. This chart shows the wages recovered over period of time from FY21 through the end of the second quarter of FY26. And these are wages recovered through both our kind of traditional wage and hour work, like overtime and wage payment and collection, as well as our prevailing wage work. And you can see, adding those up, the trajectory is going up. We're at about, in FY24-25, about 2.5 times what we were recovering on average in the previous 3 years. And in FY26, by the end of the second quarter, we're at 1.3 million, which, at least as of right now, looks like it's outpacing FY25 as well. So we're very pleased with that progress on the one hand. On the other hand, it shows how much work there really is to be done in this area. We would not be collecting restitution and unpaid wages for workers had they been paid correctly in the first instance. So this is both a source of pride as well as a source of motivation for our staff in terms of understanding the scope of the problems that our workers face. Next slide, please. So focusing in on the Workplace Fraud Act, this is a specific prohibition that the General Assembly has written into our labor and employment article. And that specific prohibition is that specifically prohibits classifying a worker who is statutorily should be classified as an employee as either an independent contractor or paying them off the books. The fact that it's a specific prohibition is important because that kind of practice, that misclassification, is also a violation of multiple other laws, right? Tax laws and withholding laws and workers' compensation laws and unemployment laws. But what this law does, the Workplace Fraud Act, is that for 2 specific industries where prevalence was found to be high, construction and landscaping, it makes misclassifying a worker an independent violation of the law. Our unit, Wage and Labor Standards Unit, is the unit who is charged with enforcing that law. As you can see, this is a little bit of history and sort of a very brief overview of the worker misclassification law, passed in 2009, amended, and it applies, again, only to those 2 industries. And I think the other unique feature of the law is that it distinguishes between non-knowing violations and knowing violations, and it has kind of a different enforcement framework for each of those. Non-knowing meaning, literally you did not know that your workers should have been classified as employees. Knowing being a much higher bar, where we as the department have to prove that that misclassification was willful. So that's kind of a unique feature of the law. We enforce that law through a citation and administrative hearing process. There is also a private right of action under that statute. So if we go to the next slide, sorry, I'm going to take a breath. This is our workplace fraud enforcement data over, again, the same span of time that our wage enforcement data was for. As you can see, again, there's a sharp increase in activity starting FY24. That increase really spikes in 2025, and again, we are on an upward trajectory here. This is, due to a number of different factors, including, I think very importantly, the building of staff capacity within our workplace fraud unit by reason of 5 PINs that the General Assembly gave us in the budget in FY25. And, a number of other factors as well. New leadership within our Wage and Labor Standards Division, sort of an increased protocol, a focus on this, and prioritizing field work to be actually out there where the people are doing the work and talking to workers. As you can see, we've interviewed, last fiscal year, 3,000 workers. And again, these are, construction and landscaping workers. And, we've found, 558 misclassified workers. I would pause and say this is the tip of the iceberg, as the next slides will show, but it is a significant increase in our activity. The one other piece I want to draw your attention to here is in the lower right-hand corner, you'll see the referrals to sister agencies. And in FY 24, we're at 130 cases referred, FY 25, 375, and in the first 2 quarters of this year, it's 239 cases. And what that means is that these are cases that are referred to all of our agency partners who have a stake or authority to address misclassification under their own laws. So if we go to the next slide, these are the agencies who are on the Joint Enforcement Task Force on Workplace Fraud, which is chaired by Secretary Wu, and which includes all the named agencies here, on whom workplace fraud has a significant impact. And when we refer a case, each one of those, 375 in FY25, 239 this fiscal year, we are literally providing details about the employer, about the number of workers, about what we found. We are giving our investigation packet to our sister agencies to say, see what you can do with this. And that has yielded significant results. If we go to the next slide, we can see here in 2025, and this is the second year, really the first full year that the Joint Enforcement Task Force was in operation, it identified 7,767 misclassified workers in Maryland. The Division of Unemployment Insurance, again, in part acting on referrals from all the sister agencies, has identified over $52 million in unreported taxable wages due to misclassification. This isn't just unreported because people didn't know to, report workers. These are misclassified workers found. The comptroller, again, you can see the numbers here, $3.6 million. And in the construction industry, the task force looks at that partly because it's, one of the industries that's covered by our Workplace Fraud Act. The research that the task force commissioned shows that 1 in 10 construction workers is misclassified. And again, looking at our own experience of our investigators, it's possible that that number is conservative. As we said, we found over 500 misclassified workers and we interviewed 3,000. So, our work really, our collaborative work is beginning. And what it really has shown, and I'll turn it back to Secretary Wu if, that she has some additional comments on this, what it really shown is that workplace fraud is a problem. And it is a big problem. And if we look at the 2025 report that just got issued from the Secretary's office, we can see the task force is finding, an increased amount of unpaid unemployment contributions, an increased amount of workers who are misclassified. These numbers, too, are going up. And that is because they are there to find.
Thank you, Commissioner Burr. Thank you, and I want to underscore the Commissioner's point, and we really appreciate the support from the General Assembly for staff to enforce not only our workplace fraud laws, but also our broader wage and hour laws. For those who have not been as familiar with this, I also want to underscore the prevailing wage laws, which the Commissioner touched on earlier. That's state contract work, like money funded by state funds, projects, funded by state funds, right? And those wages are set for a reason. If an entity is receiving state funds and state support, they need to be following the law. And so, that work is also incredibly important. And as the Commissioner noted earlier in the recoveries, we are still seeing substantial recovery there. So we know there is a need to make sure that people are following the law. And it is also not fair to contractors and subcontractors who bid if they are facing competition from individuals who are not paying the prevailing wage or following the requirements of the law. So this work, as I said, is very important for Maryland workers, but also to create a level playing field for businesses to compete.
Thank you. Does that complete your presentation?
It does.
Okay. Thank you. I had 2 questions, and I'll see if there's any other more from the committee. But just going back to slide 29 with the workplace fraud enforcement on the table, which is really helpful to see just kind of, the work that's being done. And I think commingling that with the previous table you had of the amount of recovered wages. Just wondering if you might be able to speak more to some of the blank categories for fiscal 21, 22, 23, with regards to site visits, workers interviewed and misclassified, and citations, settlements in lieu of. Just curious, I would imagine COVID had played a part in that, but I'm wondering if there's any more context you might be able to provide from your assessment on the absent data in those categories.
Sure, thank you. I joined the department under Secretary Wu in May of 2023. At that point, I'm not sure how vigorous the enforcement of the Workplace Fraud Act had been for the preceding years. So the number of misclassified workers found in citations and, settlements, I think that was just not, what the department was doing at that time.
Okay.
In those preceding years. And when we came in, that's certainly something that we looked at. Secretary Wu was going to be chair of the task force, and we, prioritized and rebuilt that program from the ground up. Again, in terms of site visits and workers interviewed, I do believe that there was data reported to the General Assembly as part of our annual report, but again, I was not here, and I want to make sure that when I'm sharing data with the General Assembly that I can vouch for the numbers that we were providing to you.
Thank you. And then I wanted to also ask, I thought maybe you all were going to go in this direction, but Secretary Wu, you made a really great point about the fact that these are state-funded projects, and in some cases, you didn't say this part, but I will say it. These are also projects that are administered by the state. And I was wondering if the Joint Enforcement Task Force has looked at any prevalence of incidents on certain projects, whether it's our transportation projects, it's highway projects. I'm just curious if the task force is beginning to look at areas where we might be able to tighten our belts a little bit more around enforcement from particular agencies.
I'll lead off, Madam Chair, and ask Commissioner Burke to fill in. I would say, first I want to underscore, workplace fraud can happen anywhere. It does not need to be on a state project, but the prevailing wage protections in particular do refer to things that are funded by the state. But I also want to indicate that we do have a departmental bill, which I think we'll have the chance to talk with you more about. And the importance there is really looking at, I don't know that we have like a prevalence number, but we definitely do see, unfortunately, that violations can occur. I don't know if Commissioner Burke has more specifics on what we've seen.
Certainly, our workplace fraud investigators visit prevailing wage sites regularly. Those are large construction projects. They're likely to be, where a large number of workers are working. It's construction, which is one of the two, industries that our Workplace Fraud Act applies to. So we do regularly visit state-funded construction projects, and as a subset of that, state-administered construction projects. I don't have a breakdown, and I don't know that we keep the data, sort of by agency, in that fashion. But we do see workplace fraud on state-funded construction projects.
Okay, thank you. Delegate Chisholm.
Thank you, Madam Chair. When you say misclassified, can I just assume you're talking about 1099 employees?
They may receive, Delegate, a 1099, or they may just simply be paid under the table. So it's like, I would call it misclassified or maybe non-classified. I don't know what another better word.
I understand the cash under the table part, but there's a lot of people that get paid 1099. I'm from a construction background. I understand all that. They want to be independent contractors. And when we say misclassified, it's like, oh, no, the employer is taking advantage of the employee, and that's not always the case. This bill's kind of been heard in my old committee several times where the nursing home assistants work at like 15 different nursing homes, and they don't want to be W-2'd. And I say that just to kind of bring home the fact that we are ranked 49th in the country in business friendliness. And I know, and I greatly appreciate what you do, that we need to make sure that we're also not driving out every business owner in the state, because the small business owners are the ones that still are the lifeblood of the economy. And I want to make sure that we're on the same page, that we definitely need to go after the fraud and we need to go after the people that are doing it wrong, but we also can't be so vigilant that we are forcing people into classifications that they don't want to be in, and our laws kind of like wishy-washy on what exactly is a 1099 employee. Does that make sense to you?
So I can try to address part of your question. It's our intent at Labor and Industry, right, to enforce the laws that the General Assembly wrote. I understand and take your point, and we have encountered in the field workers who say, I would rather be a 1099. I understand that that can happen. But the law says that there are certain choices that you don't get to make. Whether you're a worker or whether you're a business or whether you're an employer, you don't get to make that choice if the law does not give you that choice. Whether your status is an employee or your status is a 1099 is something that is determined under the law. It is not something that an individual gets to choose. It's based on the facts and circumstances of that relationship, sir, if that helps. So those are the laws that we are trying to apply uniformly. If you're an employee, you're an employee. If you're an independent contractor, you're an independent contractor. And it's not us who decides that, right? That's the law that decides that. Again, we apply the law to the facts that we see.
Okay. I just want to make the point. Sometimes that description is very vague because not every business is black or white. I mean, a lot of people want to use independent contractors to work for them for a short period of time or whatever, and then they're gone and working for 15. Everybody seems to be an independent contractor now, the way that social media works, and we can be very virtual in a lot of different businesses. I just want to make sure that we're mindful that we're not entrapping some businesses that really aren't trying to break the law. They're just trying to be as flexible as they possibly can in an environment that is very tough.
Right, understood. Thank you, Delegate.
Thank you.
Thank you. Delegate Lehman.
Madam Chair, and if it's okay, could I return to asking just one wage theft related question? Is that a wage theft related question? Okay. So thank you, Madam Secretary, and thank you, Commissioner Virk, for looking out for Maryland workers, and I appreciate the briefing. My question, first of all, is going back to, I did for 2 or 3 years a bill addressing point of sale tipping in restaurants and coffee shops, and learned, I was surprised that the Department of Labor could not enforce that because certain kinds of retail establishments are not licensed by the department. They come under the counties for licensing purposes. So what types of establishments, what workers do not come under, either by category or by type of employer, under you for those types of purposes?
Sure. Thank you for the question, Delegate. And yes, I do recall that bill. I think we have to separate out licensing and workplace protection, right? So licensing, at least speaking for Labor and Industry, is really not something that we do except in very specialized circumstances, like for third-party elevator inspectors. That's not what we're talking about. So we are not a licensing authority. I believe that it is the counties that actually license businesses to operate. So that's the licensure of those kinds of retail establishments. Now, workplace protections, if you're a worker in the state of Maryland, as a general matter, you are protected by our wage and hour laws. So you could be a tipped employee at a retail establishment. It doesn't matter whether that establishment, who that establishment is licensed by, or honestly, whether they're even licensed. If they're an unlicensed business establishment and you are a worker, our laws protect you, and we have jurisdiction at Labor and Industry to enforce those laws.
Well, maybe it was practically speaking that it wouldn't make sense or it would be difficult to enforce, what I was trying to do with that bill, but the feedback I got was that would have to come under the AG's office. We had to make that change. So I was just curious if there were categories in general that you did not, of workers that you could not, for whatever reason, protect in this way.
I mean, I think there are some categories. Each law sort of has a different scope, Delegate. But I think in that circumstance, if one were to make the point of sale application a condition of licensure, that's right. That's a strong way to enforce that condition. It's just not us that can enforce that.
And then a quick related question, Madam Chair, is that I also learned in doing that bill that employers, and correct me if I'm wrong, have to keep 3 years worth of pay records. I just wondered if you think that's adequate, if that should be looked at and maybe 5 years would be more appropriate.
That's a good question. You're correct that it is currently 3 years. I believe that models the federal wage an hour.
3 years just seems so
retention.
brief.
Understood. Thank you.
Thank you. Thank you, Madam Chair.
Delegate Terraza.
Thank you, Madam Chair. Now I have 5 million other questions than when I raised my hand, but I'm just going to ask the one I raised my hand for. First of all, thank you guys for all the work that you're doing on this. It's just tremendous to hear all about what you're doing with this aspect of it. You talked about the standard for knowing versus unknowing. Can you just say a little bit about the challenges that you face in proving the knowing piece, and is that the standard it is in other parts of the country?
I'll have to get back to you on what the standard is in other parts of the country, Delegate. I could say knowing is a high bar, as it should be, right? That's proving intent and knowledge. And so those are, as with all of these determinations, they are fact-specific. I can give you some examples of what could qualify as a knowing violation if an employer had a group of workers who they had classified properly as W-2s, and then at some point, and paid unemployment contributions on, taken withholding out of, and at some point, they retained the workers continued doing the identical work, but they, so that's, if they classified them differently at that point, we'd have to show a material change in circumstances, nature of the work, some change in that relationship to justify, why it is that they went from W-2 status to 1099 status. So that's an example. Great. Another example is, a repeat offender. And that is, at least since we've started enforcement, the overwhelming majority of cases are non-knowing violations because, businesses come up through these industries, and this is, again, quite candidly, what they see. And this is what they know, and this is how the industry, this piece of the industry that they have seen has operated. And so that is the norm that, at least they tell us, they are adhering to. And that's, I think, probably what's most concerning, when we look at the work of the task force. If this does become a norm, right, then that's that is significant detriments to the state on so many different levels, as well as to the workers. So part of what the task force is trying to do is climb on top of that and try to make sure that it doesn't become the norm.
Great, thank you. And then just to follow up on Delegate Lehman's question, can you clarify, this is the tip issue, whether the tips that are received can go to the employer or have to go to the employees?
So they have to go to the employees. And if, when we tip at an establishment, we're tipping for service, it is the workers who provide that service who are entitled to the tip. It is possible for a manager to provide service, and if the manager receives a tip for that service in that narrow circumstance, the manager can retain the tip. But in other circumstances, where a patron provides a tip, that tip is supposed to go to the line service workers. And it may be, distributed according to a tip pool, but the tip pool has to be composed of service providing workers.
I want to add on this, Delegate, that's how it's supposed to work under our tipped wage laws. We do see circumstances where companies create tip screens that are, because it's not clearly defined, or it's kind of in the area where there's not clear enforcement, where there is no worker that's getting a tip. It's actually just another service charge that is going to the company. We do see that.
All right, thank you.
Yes.
Thank you. Delegate Fisher.
Oh. Thank you. I was looking over at Delegate Lehman on the tipped wage screens because she has a long history with that. Question, are Uber drivers independent contractors?
Delegate, I think, as the commissioner said, it's the facts and circumstances of the case. We have not, I don't think, done an investigation in the state onto this issue. It would depend on the facts and circumstances, and there are many factors, and we follow the test that's laid out in the law.
If we get self-driving cars, which I'm sure we will because they're already here, but if they're authorized in the state, will they be independent contractors?
They're not people. So,
but they're businesses.
Correct, but I think with respect to our wage laws cover, you know, how people are paid. They don't govern how, you know, businesses contract with each other.
Sure. And I think this goes to the greater conversation, which is the more regulation, and I'm not saying that all of these laws are bad. In no way am I saying that. But the more regulation and the more difficulty it is to run a business, the more automation we're going to get, obviously, such as self-driving cars. Lastly, Madam Chairwoman, thank you. The family program, that hasn't been talked about. That still has not been implemented, correct?
That's correct, Delegate. I can provide a brief overview you'd like, or did you have more that you wanted to ask about?
Sure.
As you may know, we started another delay in the implementation of the program last year, or I guess it was 2 years ago now, based on the extraordinary circumstances we knew we were facing in the state and the challenges that Maryland businesses and employers alike are facing. The contributions requirement for employers will come online as of January 2027. This spring, we will be opening up a sort of beginning launch of our registration, so that allows employers to register with the program. We're actually in the testing mode for that now. Employers can choose under the program whether they want to participate in the fund or purchase insurance directly. Employers may want a different product, but they do need to register with the state regardless. Doing it this early will provide us with the information so we can have the best actuarial projections as to how many people are going which way. We also are doing this soft launch idea really, and we're talking with the chamber and other business associations, because we really want to do things differently, I would say, than we did them in the past, which is we need feedback from businesses. We need it from the TPAs, the CPAs, people who are doing the hard work of maybe submitting for multiple small businesses, to say, how can we make the system more transparent, easier for you, make sure we can catch problems earlier, and just make it more user-friendly. So that's part of it. And if you have constituents that are particularly interested in this, we'd be happy to work with them and give them that opportunity. We want to make sure we have a diverse set of employers where we can get their honest feedback about how it's going. We understand people may have policy differences about the law or not, but the fact is it is the law and we are going to implement it, but we want to make the process as transparent and seamless for everyone as possible.
Thank you. Delegate Solomon.
Thank you, Madam Chair. Thank you again. Madam Commissioner, just two questions for you. The data in particular from the report I think is super helpful. Just curious if you have any sort of quantification around potential increase in back wages, or if there is any number that you could assign to the wages that Marylanders would be getting more because of the work that you all have done, like somebody who maybe wasn't paid minimum wage appropriately through an investigation, anything like that?
I think it's going to depend on kind of what the nature of the violation is, Delegate. You know, someone who wasn't paid overtime, you know, is losing. It would depend on how many hours and sort of what their base rate is. You know, someone who's not being paid minimum wage, you know, that's a different type of violation. Someone who is entitled to take paid sick leave and instead has to take a day off without pay, you know. So it's highly variable, I guess is what I would say. You know, due to misclassification, there are some statistics that we have in the report about sort of how much essentially of a pay cut workers take by who are misclassified. You know, and I think it is upwards of 30% for you know, for construction workers. You know, they lose because they are taking on the risks, right? If they get hurt on the job and they're not covered by workers' compensation, they have to take time off and they don't get pay for that. They aren't covered, they aren't required to be offered health insurance. So it's sort of a cascade. And I believe that there have been studies which are cited in the report that try to quantify sort of what is the effective wage detriment to a worker who is misclassified.
Yeah, no, I mean, the reason I ask that is, I mean, your work is literally putting money back in the pockets of Maryland workers, which is so important. I think a really important story to tell. The other quick question I had is, so when you identify a company that has knowingly, I think non-knowingly is a different circumstance, but when you've identified a business that has knowingly committed wage fraud, is there a registry, or are they flagged in a state or county available database, like in a procurement database, so that if they are trying to compete for a contract or be a subcontractor on any public contracts, that flag is indicated? Or is it like there is self-attestation box when they submit an RFP?
I do not know. That's a great question. I do not know whether there is this type of self-attestation and whether workplace fraud or wage violations generally are included in that self-attestation. I would defer to our sister agency at DGS and procurement around those issues. I can say that a Workplace Fraud Act violation, even a knowing violation, is not currently grounds for debarment under the state contracting system. And that is one of the targeted pieces of the bill that we'll be talking about on Thursday.
Excellent. Great. Thank you very much. Thank you, Madam Chair.
Thank you. All right. Well, thank you so much, Secretary Wu. I want to thank Commissioner Verk, as well as your other colleagues, Ms. Steele and Mr. Perkins-Cohen, for your presentation, and also for your willingness and openness to answer all of our questions. So with that, committee, we will adjourn. And I also just want to remind the public that we will reconvene at 2 p.m. for bill hearings. So thank you very much, and we'll see, or 1 p.m. Sorry, thank you. 1 p.m., not 2 p.m. Thank you. Think about tomorrow. Thank you.